Hey, what's up everybody? Happy Valentine's Day weekend, whether you're celebrating or not. If you have a Valentine or not, if you don't have a Valentine, hey, this video, I'll be your Valentine on this video. You be mine. Let's do it that way. Listen, this weekend, no recap video, no ticker. I'm taking the 3 days to chill, get rejuvenated for next week, but this video's been pending and I know a lot of people have been waiting for it. So I said, gotta get it out there. Let's do it. There's a market overall recap video coming out from Sherv that'll come out today as well. This video is all about trading around the core. One of the best tactics to use when you're trading in a very strong, healthy position. So there's a couple theories in trading, right? Scalp trading, there's just scalpers in and out every day. You're trying to make, a couple bucks to survive. You end up missing the entire big moves. Swing traders, where they hold long for a long period of time until the chart tells them, okay, it's over. Okay, that's a really good theory. It's one of the main ones that I use as well. Long, you just buy it, you set it, forget it, still and go. You don't even look at it, you don't even think about it. What we're talking about here is trading around the core, is trying to incorporate all three of those ideas into one. This way, when you're in a great position in a chart, you're still using the technical analysis, you're still using the chart to allow you to say, hey, this is time for me to take off some profits. I believe in the company. I love the overall bigger trend of the chart. I still think we'll go up higher, but this is time for me to start taking some profits off of the table. And then when consolidation comes, to relayer those profits in. Let me tell you, we're going to go through score here. I'm going to use a basic example. We're going to use 10,000 shares for score. Okay, so we're going to buy score. We're going to use 10,000 shares. Doesn't matter the dollar price, but we'll watch how the chart develops. I believe in the company. We believed in it, and it was right in this range that we believed in it, that we knew we would start to see a big move up. So let's use 10,000 shares. And here's what we're going to do. We're going to go in with 10,000 shares, and this is going to be our initial position. And our initial position of 10,000 shares is our core. The core is 10,000 shares, meaning we will never hold less than 10,000 shares. We are going to scale up into the trade. We're going to scale out, but we will never be below our 10,000 share core. So we've committed, we're going to hold this chart. We're going to hold it till legalization of single sports betting in Canada, whatever it is, whatever chart you're playing, whatever their, milestone that they're looking for, whatever the catalyst is, you have your core, you're never going to sell. But there's moments in the chart where you could swing a little bit more, you could add some scalp trading into it, and you could extract more money from the trade. Why not just hold everything you wanted to hold? Why not put in 50,000 shares and just hold it? Well, there's a couple things. One, it's clear moments in the chart where we know there's going to be time that chart's going to get too far extended. We'll use simple indicators, right? We'll use simple indicators that I generally teach. We'll use the ADMA. Let's bring that up in here, and let's bring in the Bollinger Bands. Okay, let's bring in those two. So two things we're going to use in here, plus, of course, always our volume. So because I want to really show when there's opportunities to take profits off of the table, I'm going to keep these two indicators on the chart. The ADMA, which is this white line in the back here, and the Bollinger Band, which is the little faded cloud you see in the background. These are two great indicators to tell you when the chart is too extended. I'm not going to use RSI as an indication to tell me that we're extended. I don't care about RSI. Minus RSI telling me there's divergences in the chart, which is going to give me some concern in a position. But for this video, we're not going to talk about trading divergences. We're just going to talk about trading around the core and how to establish moments in the chart where you know it's time to add and time to take some off. So we're in with 10,000 shares. We need to determine now, how much more do we want to add? This is going to be flexible. We might want to add 20,000 shares extra. We might want to add 40,000 shares extra. There's going to be moments in the chart where we could go in super aggressive, but when to take that money out? When you swing long and you just hold long, you're subject to news overnight. You're subject to bearish futures markets. You're subject to dilution in the chart. All those things are going to factor in. So when we have our core, and we've built up enough gains and we've traded around the corner, we've extracted gains, we're not going to care about the overnight activities. We don't care if it's going to be a lower open because we've been making money along the way. And I'm going to show you how. This is case number one, but we're entering here. Case number one. Look what happens. This chart ran from 28 cents to 106. Nobody wants to sell. And we have a clear moment in here where we have a volume climax too far extended from the upper Bollinger Band, too far extended from the ADMA. We know at this point in the chart, because we could clearly see it here, we're going to consolidate. So if I was already in, see how far we are from the ADMA and where we are from the upper Bollinger Band. If you've been watching my videos, you know, these are some of the things I was talking about. We know we're going to consolidate. So if I was already in my 10,000 share core here and I see this candlestick and I've added, I know at this point I'm going to get ready to subtract. But let's start the chart from here. Okay. And this is, I can't remember where we got in, if we got in this candle, wherever it was. We're looking at this trade and we say we have a thesis. Our thesis is we believe we're going to go up because of the single sports betting. And I'm going to use SCORE as the example for this entire video. You could use this on anything that's been going up, right? Tesla, Peloton, Apple, whatever you want to do, you can use it. But this is a really good example because I've currently been doing this and I've done this the entire way on this chart. So let's get into it. We get into the chart. We like the idea. We believe there's an opportunity here. We think we're going to run and we have an event coming up. Also, first thing first, we got to make sure we find a good entry. So what's a good entry, right? You know, spinning top candlestick, lower high, not a good entry. Like we know this is an opportunity on a chart that likely going to see a move up eventually. Consolidates lower high, lower low. But right now, look at this, right? This is our demand zone and it's bought up 1, 2, 3, 4, 5 days. So here's our entry. Doesn't matter if we get a perfect entry or not, if we entered here, it doesn't matter. But now we're starting to see, hey, potential reversal coming out of the zone. So I'm in my 10,000 shares. A couple candles start to print and we're starting to get a good trade here. Now, we see this. We know when we see a big volume candlestick come into a chart, what do we anticipate? Higher prices to come. Big positioning means major demand. Demand has come into the chart. We are in a great position. We're 10,000 shares in, and now we're seeing momentum into the chart. Now, when I see this candlestick, I start thinking I need to get into this trade a little bit further. Now, maybe I haven't added yet because I could be looking at the chart here, and I'm just looking at this example in here, and I say, you know what, we got an upper trend line in here. We have our, you know, supply zone right in here. We've been unable to break through this zone. I'm not too eager right now for adding around the core right now. I've just got my core. We know we've got a good position. I see the volumes coming in. This is great. What do I want to do? I want to break this zone, right? I want to break this zone. And when we break this zone, I want to see maybe there's going to be a back test of this range. Maybe we'll set up a bull flag. And then I start thinking about where am I going to add to the position. Now, we're watching the chart go. So boom, we break out. Now, on this candlestick, on this day, you add to the core. Why? Because you've broken through this trade. Now, reminder, this is a combination of scalp trading and swing trading, trading around the core. We've got our 10,000 shares in. We're up pretty big. We come off of the bottom. Let's say we entered on this candle, 69 cents. We're up to over $1.04. We're up over 30% on this trade. On this candlestick, we would have known to enter more into the trade. We're not going to sell the 10,000 shares. We see an increasing volume candlestick day. So, you know, this is TradingView showing us on the daily chart. But we would have known early in that day, if you watch all my videos where we're talking about watching the volume, what kind of volume is coming in? Is it increasing volume from the day before? If you were watching the pre-market video for that day, I would have said, what do we want to see today? We want to see increasing volume. When this candlestick showed us early, big volumes coming into the chart, we anticipate we're going to break through this zone. This is the supply zone on very low volume. Very low volume. So big volume is going to blast through it. So on this day, I would have entered once we broke one of two. Once I saw the big bull volume come in early, or once we broke this range in here, I would have entered. And if I entered in here, let's just say I want to add to my core, right? Let's just say we even got the worst entry in here, 20,000 shares added. So I have 10, 20,000, and we ran up, and we know how far extended in here. Now, for me, I'm likely going to say, listen, we're 106. We're so extended on the day. On the day, the upper Bollinger Band has opened up. It's going to continue to open up, but we're likely going to need some consolidation. What I would have done is on this day, been a scalp trader. I would have added 20,000 shares. Let's just say, you know, I can come over here and say I added 50,000, 40,000, whatever it is. You add what you've established is going to be your additional trade. But as soon as you saw this candlestick starting to curl at the top of the day, we would have to zoom in and see what that looks like on the hourly chart, 30-minute. Maybe we lost a 30-minute ADMA, something along those lines. I would take that 20,000 shares and would take it right off the table. In that trade, I had made an extra, let's just say I didn't get out right at the top. I got out maybe right in this one. I made an extra 13% on the trade. So I'm up 13% on my next trade, which is trading around the core. But reminder, off of the low, our core, let's just say we entered here on this candlestick. Now, our original trade, and let's get this tool to work. Our original trade in here is still up 38%. Now, I've extracted another 13% from the trade. Maybe I didn't do it great. I extracted 10%. I've taken out another 10% off of this trade. Now, if you think about it, I went in with bigger size. I doubled my initial. I went with an additional 20,000. So technically, I had 30,000 shares here at one point. But I've taken off the gains now. Now, what happens with my original core? This is where most traders really struggle, because once they added the 20,000 shares, their original core entry that said it was at, their average price was 70 cents. Now their average price says it's about 83, 85, 87 cents. So their mindset is like, oh no, I've just raised my average. We don't care about average prices here. We care about making money. We care about extracting more from the chart when there's opportunity to do so. If I came in at this point in the chart and I added 20,000 shares in here, okay, so now I've got 30,000 shares and I added 20,000 at 88 and my original entry was at 70, my average is now in the 80s. So if I think about this trade where I added 20,000 shares in here and I'm wrong and it comes back down, right? And now I'm like, okay, here we are, 80, let's just say 82 cents was our average price. We're like, okay, that's my new break even. No, we are not looking about breaking even. We've got a trade that is 38% off of the bottom. That trade is the original core entry. Any additional trade we make is to make money in that particular trade. We're not messing around with our first 10,000 shares. We don't want to think, oh, my new average price is 82 cents. Well, what if we get faked out in here and the chart collapses, dilution, something like this, and the chart folds on us? We've just let a beautiful long entry become a losing entry because we made a poor choice on our second entry. When we make that second entry, third entry, fourth entry along the journey, we always have a clear invalidation for that trade. Our first trade is our core. Forget it. We're holding this. The next trade needs to have a clear stop loss. My stop loss is not break even on my overall trade. My stop loss is, am I getting faked out here? Is the bull volume not increasing? Did we just get stuffed? Did we just double top? Is there a bearish reversal candlestick printing that says, okay, I got to get out of this? We need to treat the second, third, fourth, fifth entries along the way very differently. They're a new trade. They're a new trade idea. You don't want to get into your psychology of my new average price is 82 cents. The moment I get into this trade, and let's just say I got in because we broke 87 cents and I have the volume, and we break 87 cents and we stall right away. We stall and then we see big bear volume coming in. I'm out of the trade. Out. No, this was a fake out. Out of the trade. In this case, it didn't. Now, I've taken it off. I've taken off the 20,000 shares because my focus in here is not to, hey, let 30,000 shares go up. I know we've just seen an extended movement here. We're, getting into overbought territories. We're right back up at our resistance. We might break this zone, but it's overnight market. I've already taken off some gains. I've got my core in. I don't want to worry about it. Let's see what happens next. Boom, next candlestick. So we didn't swing the additional 20,000 shares. Now, you look at this candlestick, you say, oh, I should have. Why? You didn't need to. What happened the next day? We had a higher open. Looks like maybe it just exactly it opened at the previous day's high. It dipped, and then look at the volume. Boom. So we know there's a lot of momentum coming in here. We know the demand is huge. What do? This day, the exact same thing. We have our 10,000 shares. We've made money on 20,000 new shares. What are we doing? When we come into today, we're being prepared that if this breaks yesterday's high, we're not seeing a gap up here in the morning, breaks yesterday's high, we see big volume, doing the exact same trade. 20,000 shares, maybe we're going to go a little bit more here. We don't need to go more. You establish what the additional trades are. But we know there's more opportunity to go up because of demand is here. We're breaking out. Now, this trade here didn't give us a reason to sell on this day. Now, look at the run. If I went in here with an additional 20,000 shares and I hit the entire move because it didn't give us a reason to sell, it was probably walking up the 15-minute ADMA all day, 35 additional % on those 20,000 shares. What a day. We're killing it. Now, our average on the chart on our P&L is probably going to say our average is like $1.10 or $1.12. But if you think about the money we extracted in here, the money we extracted in here, and where we're holding our core, for us to break even on the overall core trade, is probably down to 20, 30 cents, down in this range because of how much money we're already making. So now we know we're holding long. We never have to worry about our core because we've made so much money along the way. And when this is our baby moving forward. Now, do I want to swing the 20,000 shares in here that I added? No, I don't. But I'm probably going to want to say, you know what? We're closing at the high today. There's a lot of momentum. I've taken 20,000 off. I've got a bunch of profits here on 20,000. Maybe I am going to swing an additional 10,000 shares overnight and see if we get one more gap up, one more climax. I can't remember what actually happens here. I'm just playing this out as we go along. That could be an opportunity for you to try. And the reason why you would do that and you feel confident to do that is because you've already locked in your four-figure profit, five-figure profit, six-figure profit already in this trade. You're killing it. So you might say, you know what? Listen, I have my core down low. I've already made some money. Let me throw in an additional 10,000 shares on the swing. If we don't get a gap up, I know we're going to be giving some back. We're going to see an inside bar. And it's going to be okay because you're not going to be too worried about it. Let's see what happens on the next day. Boom, gapped. Okay, I didn't know I was going to actually do that. So here we go. 10,000 shares. I would have swung an additional 10,000 shares. Look where we opened. We ran a little bit and then we pulled back significantly. When we gapped and we're this too far extended, you know what we're doing. We're watching the first 2 5-minute candlesticks. Are we making new highs or are we making new lows? We would have got out of the trade right away. The additional shares that you sold, that you swung, you take it off. You still got your core. Now you've made a killing on this trade. Your core trade is looking fantastic. But now you're back to your 10,000 shares. There's things happening in here. I would look at this trade, you know, next day, guys. Let's say most likely we're going to see an inside bar. So I'm not going to swing an additional amount. I don't know. If it gaps up, it gaps up. But right now, we've got to be a little bit protective because look how far extended. We're completely detached from the upper Bollinger Band. ADMA is, you know, basically 50% away right now. We have to be a little bit cautious. Let's see how this chart develops. I'm not looking to add into the core right now. I'm just going to allow the chart to consolidate because it needs some consolidation. What happens next? All right, so we got a lower open. Okay, not too significant. And then we started to sell off. Who cares? We got our 10,000 shares from the bottom. We've made a ton of money on this move. What are we doing now? We're thinking about buying a dip. We're thinking about adding into the core. But we know there's been a significant move in here and we need a period of consolidation. So what we're going to be looking for is now we got the reversal candlestick. We're going to look for a drop. We're going to look for an ABC correction. So eventually there's going to be a bounce back up and then there's going to be a trade to be had in there. Let's see how this candlesticks continue to print. Okay, now next day we see indecision. So we're seeing less sell pressure. What are we seeing in here? Decreasing bear volume, right? So now we're loving the consolidation. We're like, okay, we're going to set up a new base up in the zone. And now we're going to think about, is there going to be another trade to be had? Let's see what happens the next day. And we went back up. So on this day, you could say, listen, you know, do you want to get back up and trade around the core? Is there an opportunity here? On this typical day, I wouldn't have done anything because what I would have been doing myself, and doesn't mean right or wrong, you could have made money on this trade. What I would have been doing is saying, we're going to go through a lengthy period of consolidation. We need some time for this chart to develop. I'm not doing anything else right now. I want the ADMA to catch up. I want the upper Bollinger Band to open up more. I want to start trading in this range. And then I'll look for an opportunity to get back into the chart with more in terms of adding to the trade. So you can see we went up a little bit higher. Okay, now on this day, we started to come back up in the zone. This is where trading around the core tackles hope, fear, greed, and regret. Because now you might have a little bit of FOMO, right? Oh, it's going all the way back up. It's going to make a new all-time high. And I haven't added back to a trade. Doesn't matter. We have our 10,000 shares. Our 10,000 shares from the low removes any FOMO, fear of missing out. You're in the trade. You want it to go back up. This is great. Are we going to make a new high? If we make a new high, I mean, if I look at the chart at this point, right? If I made a new high here, I would have bearish divergence. We'd be back up over the upper Bollinger Band. The bull volume is not significant. I would look for consolidation after a new high. I don't care. I have my 10,000 shares. The original entry right now off of our low is up 150%. And we've extracted so much more money from this trade. I don't care what happens in here. If it doesn't come back down, that's okay. We're in. I don't anticipate it's going to continue to go. What happens next? It doesn't. So now we have our lower high on the chart. And the chart's doing what technically, from a technical perspective, we believe it should do. So what are we going to look for? We're going to look for the chart to come back down. And we're going to try and find a higher low compared to our low. Let's look at this, see what happens next. And okay, so there's our potential higher low. Okay, no, next day, 2 days, 3 days of consolidation. Now we have a doji right above our daily higher low. So we're looking at this zone now and we're saying, okay, this is great. If we could hold this as our new hold zone, 141, that's great. Overall, we're still likely needing a little bit more consolidation after a massive move. We have our lower high. We're trying to find a higher low. Does this higher low hold? Okay, so our higher low didn't hold. Now we drop down to a lower low. Now, you're thinking here, ooh, what do I do with my 10,000 shares? You're not concerned about your 10,000 shares because your 10,000 shares, although you're giving back quite a bit on it, you have a thesis on this trade. You have an idea of where the chart's going to go. We're thinking into the event. We're not thinking about what's happening here in the middle of December, right? We've made our money. Now we're thinking about, okay, we need a base. We just want to see this chart the bear volume start to drop off. That's a big lower wick, so we know a portion of that bear volume is bull volume, and we want to see a base established in the zone. Not adding to the 10,000 shares, not taking it off. Let's see what happens here. Made a new low, no follow through, lack of sellers. Starting to feel really good that we're going to base out in the zone. Let's see what happens next. Inside bar, broke to a new low, no follow through. See that there? No follow through. This is the bear flag here on the daily, but I'm noticing lower wick, lower wick, lower wick, and the bear volume's dropping off. So I'm not too concerned about the bear flag on the weekly, because if I go on the daily, because if I go look at the weekly, this is very healthy weekly consolidation that's taking place. So moving on, looking at this here. Here we go, reversal candlestick. Now, this is a different strategy for a swing trade. You can think now, I've got my 10,000 core, I've made a killing on this trade. I love the opportunity in here. We've been consolidating for 2 weeks and we broke down here and we were unable to make a new low, right? Bears couldn't push it down further. We ran out of sellers. Right now is your opportunity to say, I want to add to my core. This is a new idea here. I have a 10,000 share core. The reason why I'd be comfortable to add to it is because I could see we're basing in this zone and there's some bear volumes dropping off and a little bit of bull volumes coming in. On this candlestick, now, next day or this day, I say, you know what I'm going to do? I'm going to add 10,000 shares to the core. It's a 20,000 share core now. And now, because I've made money along the way, I've been protective, I'm not going to be too concerned about adding to my core in here. Reminder, we don't want to mess with our original core. The 10,000 core, we make an additional entry in here. Now we're going to have 20,000 shares. Where's our stop loss for this? It's right here. That's our stop loss, 127. We don't want to say, hey, listen, my original core is 70 cents and now I've added 10,000 here. That's 173.35 cents. My new average is 105. Again, we don't want to do that. This new idea of adding to the core, we want to limit the risk. And the risk would be limited by using that as our stop loss. So now I've gone in and I've got a 20,000 share core. Let's see what happens next. It's a bad entry, right? You think it's a bad entry. It's a bearish engulfing candlestick. You're getting a little bit worried. And you're like, man, I mean, just this 10,000 shares, I'm probably going to get stopped out the next day. I don't like the action that's taking place. We immediately got a bearish reversal candlestick. I would be very concerned about this if we didn't have our core here and we didn't extract a whole bunch of money in this zone. As of right now, hey, if I get stopped out on this additional entry, I'll look for a new entry. Let's see what happens next. We didn't get stopped out. I don't know what happens here. We're just going through it. I don't recall. Let's see what happens next. We didn't get stopped out. We start to push back up, start to feel a little bit better. Okay, now we got a clear double bottom in this zone. 20,000 shares. And let's see what happens next. Boom. There you go. Your original entry in here, you had a clear defined stop in that zone. If that zone breaks, this day you thought you're going to get stopped out because we had the bearish engulfing candlestick to push down, but there's no sellers. If you look at the volume, and trading around the core is you encompassing everything else you've already learned and you're already using. Watching the volume, watching the consolidation. What does it look like? Everything looks healthy here. Reversal candlestick, double bottom. Our additional 10,000 core entry is well into the money now, right? So if we think we entered on this candlestick, let's just say worst case scenario, we bought the top of that candlestick, we're already up, 14% on that additional core. So now we got 20,000 share core and we're thinking, I'm not selling the 20,000 now, right? I want to let that develop. You know, don't forget your 10,000 stop is in here, right? But you could start thinking about, you know what, I'm going to start walking up my stop on the 10,000. It's an idea, break even. You could do that. You know, maybe I'll put 144 break even, or I'm just going to leave it down in here because I really wanted to get more shares in here. I'm going to allow it to develop. So now let's look at the chart. We could see here, okay, bearish engulfing candlestick. So you can see the Bollinger Bands in here, right? They're pointing down. This is when you know you're going to go through a lengthy period of consolidation. You got your lower high, your lows. Again, you top out in this zone. You could have said, you know, maybe your additional 10,000 shares you would have sold in here. But the idea is let's hold 20,000 shares long. Maybe you're going to place your stop break even, or you're going to respect your stop down in here. You're not too concerned about what's happening here. The bear volume is not too significant. Yes, we double top, triple topped in this zone. Bollinger Bands need to open up. What we're doing in the overall chart is basing up in a new zone. This is a new zone. This is where we based before, and now we're looking to base in this zone. So let's allow it to continue to print. Let's see what we're going to do here. Okay, we're still slightly into the profits. We were break even there. We're heading back up. Now, in this case, you can see we found our higher low. So lower high, we found our higher low, and we're starting to move back up. So this additional entry that you made, if you kept your original stop, you're in a good position. I still don't see another big trade in terms of let's get into momentum. Let's go into the more scalp intraday and catch an opportunity. We're consolidating. We're basing, and that's exactly what I would look for, a base. Now let's move on. Coming back up, and we struggle in this zone again. So now we know this is the zone. If we could break through this zone in the chart, we're going to run. Upper Bollinger Band starting to curl to the upside. We've got our daily higher low. So now we know there's opportunity here. We're going to be watching the volume to really tell us if we're going to get a breakout. If we get a breakout, I want to add to the trade. And we're going to do the same additional strategy that we did in here. Let's move on, see what happens next. Boom. Okay, so we broke out. Now, you could say, listen, my 20,000 shares is well into the money. Good opportunity here for a continuation play to the upside. I think we're going to have opportunity to break out. We have potential to see a increasing bull volume. Excuse me one second. Increasing bull volume to the upside. I think there's opportunity here. Now the next day, because I have my 20,000 core, I'm feeling pretty good. The next day I'm going to say, listen, if we get increasing bull volume and we start to break out again because we close at all-time high, there's going to be opportunity to go for a big intraday move. 20,000 shares, maybe 30,000 shares extra. Let's see what happens. Here we go. Continuation to the upside. So if you're doing that right now and you're playing intraday, you're making some more money. Not seeing the big moves, but there's opportunity, right? If we think about this amount of range in here from yesterday's high to the new high of today, if we think about that, you know, 8%, maybe you got 4% of it, maybe you got 5%. Again, you're trading around the core, you're making some good money. Continuation. You've added to 20,000 shares. This chart just continues to go. It's your favorite chart. You love it. It's your baby. What do we do here? Okay, now on this day, we see the bearish engulfing candlestick, so we anticipate we're going to see some consolidation. If you try to play the new high on this day and potentially was looking like some volume, you're probably going to take a loss in here, right? You got to act really quickly to see, oh no, we're not going, and then we start to push down. So if you made a new entry in terms of trading around the core, added 10,000 shares, added 20,000 shares, this is the day you're going to take a loss. This is the day that wouldn't have worked out. We made a new high, boom, bearish engulfing candlestick. Use good risk management, stop out pretty quick, get out of it. Overall, you still have your 20,000 shares and you're well in the money. Let's continue to move on this chart, see what else we're seeing. Inside bar, wow, no more sellers on day 2. And I guess that was a reaction to earnings. That's great. We're feeling good. Boom. Gapped up into this resistance. Look at the volume. You're adding to the trade. It's just the additional. I'm adding 20,000 shares intraday, riding the 15-minute ADMA, riding the 30-minute ADMA. Now you're swinging 20,000 shares. You're well into the money. On this candlestick, on this volume, closing in blue skies, I'm likely adding to the swing. It's not adding to the core, but I'm going to swing because I'm looking to see if I'm going to get another gap up. Maybe I'm going to go 10,000 extra. Maybe I'm going to go 20,000 extra. At this point, because you're making so much money in the trade and you've traded around the core and you're 6 figures in this trade right now, you're thinking, listen, I can afford running up another 20,000 shares on the swing. If we get a gap up, I'm going to take it off. Let's see what happens. I would have done it. Now let's see what happens here. Okay, so we gapped a little bit. We dropped. We don't know if that happened early or whatnot, but we had opportunity to take profits off on a gap up. Chart's still looking pretty good. Volume's good. Bulls bought the dip. We're in a really good position. I'm probably not swinging more on that trade, but look at the next day. Gapped again. Now on this, because I didn't swing in here and we gapped up, you probably be like, where's the FOMO? There's no FOMO. You got your 20,000 shares off of the bottom. You want the chart to do this. You know it's getting very extended in here. You could still make some intraday scalps. Let's move on. Here we go. We got another gap, and then we started to see a reversal. Consolidation. 2 days of consolidation. I'm thinking maybe we're setting up a bull flag in here for another bigger move to the upside, but you know, we're a little bit extended here. I want that ADMA to catch up, but I do like the bear volume is dropping off. Let's move on, see what else we see on this chart. Okay, we're coiling up in here, so there's going to be opportunity. Now, 1, 2, 3, 4, 5 days. Bear volume is completely dropping off. I still see no additional trade right now. I see no adding to the trade, just holding my core. Let's see what happens in here. Okay, now, your core, 10,000, 10,000. You see this consolidation day? Ooh, you know, big pullback. Why would you care? Off of your additional trade, you're still up 93%. Off of your bottom, you're still up, and I'm gonna have to fix that one because I can't even see it. Off of your bottom, off of your original entry, you're up about 294%. But you've traded around the core this entire time that these candlesticks don't affect you. You don't care. Chart is healthy. You have an event. You're running into the event. You just want to see the dip get bought. Here we go. Bear volume dropping off. Bulls come in. This candlestick in here, it likely could have been an opportunity to add to the trade. In my mindset and where I typically think about where we are in the charts, that's not a day where I'm looking to add and, you know, do a scalp trade or something. I'd be focusing on something else. I would just say, beautiful, exactly what we wanted. We're going to find a new base up in this range. We have our core. We don't care. Move on. Let's see what happens next. Lower open. Somebody who got in just for the gap up, what did they do? They wanted a gap up over our resistance, overall our all-time high resistance. Bad move, because we're trying to gap through resistance. We got a lower open because we weren't getting gap up. People that wanted just the gap up, they're selling, they're nervous, they made a bad trade. We don't care. Overall, we don't care. It doesn't bother us. So let's move on here and see what happens next. Nothing. We're basing back up into that zone. Boom. Big bull volume, new all-time high, right? New all-time high. This candlestick in here, that increase in bull volume, there's a trade in here, especially because we made a new all-time high. You could have made an additional trade around the core, right? On that break of a new all-time high, increasing bull volume, you could have added 10,000 shares, 15,000 shares, whatever you wanted to do. Everything's looking good. You haven't changed anything in your core strategy. And here we are. Let's go. Continuation. Gapped. Gapped. Now, we hit a target. On this day here, because we closed at all-time high, there's opportunity to continue to add in terms of wanting to swing more. I'm going to add 10,000. I'm going to add 15,000, wanting to swing more. In this case, same thing. Or you could have just got in the next day. You don't need to add. You can wait for the next day, see what's going to happen. And in this one, we got our gap up. I'm going to end the video here. That's a real brief explanation on the idea of what trading around a core means, trying to find proper second entries, trying to layer into momentum, make sure you're taking it off. It removes the hope, fear, greed, and regret, but it allows you to extract more from the chart than just saying, I'm going to hold 10,000 shares long. Because if you hold 10,000 shares long, that's great. You're up huge on the trade, but look how much more money we made along the journey. I hope you enjoyed the video. Let me know if you have any questions or comments. Peace out, everybody.